Good morning, YouTube. Today I want to talk to you about a few things, and it's been a little while since I've been on here. So let me give you some catch up. The economy, interest rates are, what we thought they would be, at like 5.25% as far as the base. That the for business purchases, as far as land and things to build your business on, is like 8%. Quite a bit higher than the prior 4%. We'll say those expenses, those interest expenses, are double what they were before, which is a significant difference. So how does that change the value of things? Well, it changes the value of the underlying asset, but not how much people are willing to offer for the property initially, because there's a lot of built-up cash and things in the economy. People think right now that the thing that we're in will be coming out of it in 9 months, and so what they're doing is they're buying for 9 months out. The second thing that they're doing is they're buying not based on the housing market or the interest rate, but they're buying based on the rental market in the area that they're in. So let me show you that real quick. So if you look at this market, this is a market that I'm in, and so in the market I'm in, I see houses, and based on rents that I've seen come up, and what they're at, I can price these houses, and the houses might be good enough price to buy them based on the rents, even at 8% rate. So if you look at rents in an area here, and you apply it, these are the rents in this area. Now, come over here, and you can take out apartments and townhouses, and what you'll find out is there's a significant limitation in how many houses are for sale in this area, in areas over here. Certain areas everybody wants to live in, and so there's no houses for rent. So if you find a house, for instance, right here, you look at the ratio of rent to the house, you might be able to justify buying that house even an 8% rate if you expect the rate to go back down. Now, let's say you go outside your knowledge zone. I'm going to look at a different city that we just looked at the other day. In this city, you have these prices, okay? Now, what you don't know in this map is how long does it take each rental to get rented when it comes up. What are the prices ranged for the last 6 months on the rent, and how many things are outstanding. So you look for here, you can look at rent, you can find the obvious information, but there's a lot of gaps in this information here. You can't make purchasing decisions just on this information, because you don't know how long the other rental in this area was up for rent, right? So if you look at this says $18.50 per month, and if it comes up here, we could go into it and see like how many days it's been on the market, right? So the problem with that is that it's really hard to track as far as rentals, how long they've been on the market for rent and rent reductions and things. You can do it with houses by watching the market. You can do it with rentals by watching the market daily to see what pops up, how long it's there, what it ultimately rents for. The economy in general. This is an economy whose underlying structure is fantastic. It is basically pushing up. It's pushing up, and interest rates are pushing down. And so the stocks right now keep having glimmers of hope that this pressure above it is going to go away or be overcome, and that their earnings are going to be great. But that's not happened so far, and so they're essentially been weighed down. So I've been buying and selling some stocks based on these spikes. When it goes up, I don't think it's going to go very high, so I'll sell, and then I'll buy back when it goes back down. And so I think that cycle is going to continue for another year. You'll see the next Fed interest rate thing in June. They'll either raise it or they won't raise it. The market will react similarly over a week. The day or two afterwards, they might go up or down based on what they're thinking. But after that, they'll still be pressed down, because they're not pressed down based on the interest rate risk, or the interest rate that the Fed's going to have in the future. They're pressed down by the availability of money today. And so that's a couple things that I've seen on the stock side. I had single house, and I've bought 2 houses this year. One of them I put an offer on it with what looked like cash. Essentially, I was financing versus a different house, and they turned it down. They turned it down because they had an inspection. The inspection said roof and plumbing issue, and people get scared at that stuff, and they back out if they're buying it for their own house. And what happens is the homeowner talks to the real estate agent and says, how much could this cost? The real estate agent tells them $25,000, right? And so between that and a couple things need to be done in the house, they're thinking it's a $40,000 fix-up. They're terrified. I go back, I put the same offer in, and they take the offer. They take it because it is expensive potentially for them to go out and get bids from 3 or 4 different contractors for different things. They don't know how to pick contractors. They don't get 3 bids necessarily. They don't know how to explain the contractor they want, and their price is just more expensive if they're going to live in the house for contractor work. And so those things make their risk larger than mine, so I'll take that risk on. I also had put an offer on a duplex. A duplex in Kansas City area went above asking price, and I also had a quadplex that went way above asking price, and another duplex that went way above asking price. And the problem with the last duplex, I will tell you, is that it had 4 sub pumps and possible flooding issue, possible roof issues, and things like that. And so that person probably had lost several deals and was like, I'm getting this deal. And so they went high on the price and bought something that essentially going to have to put a lot of money into to fix up. So maybe they plan to live on one side. They got FHA mortgage. Is it worth it? Well, at asking price, it was a great deal for the rents in that area. At well above asking price, with all those issues, basically, that person's going to be dumping money into that place for years. They're going to come back and write a little YouTube blog and say how bad it was and how much it cost them and how rentals are horrible. But the fact is, they bought the wrong place. It wasn't the right price to buy it for. They didn't price in the risks. And so one thing I'm trying to do is not buy bad houses because things are tight. So pare down, houses that you don't want to own long term, and look at a house or property and say, is this something I would want to own? Right? Does this have the right bones? Does it have the right look? Those type of things. Especially once you get established, owning a set of properties, which is what you want to own, is great. Just owning a bunch of random things that have random issues in them, that's not anything that you want. Maybe you start out with the first 3 like that, but after you get going and things are, process is built and you're buying good properties, then go back and pare those out and roll them into the good properties you have. The last thing I would say is this whole process of understanding the money costs, understanding the rental market, understanding the housing market, can be localized to a very small area. I would say I understand about 3 neighborhoods in Rogers, Arkansas, and I understand a couple neighborhoods in Lee Summit, Missouri. I could expand that knowledge, but right now I check those places every single day to make sure I'm up on what the value of the house is, how the rentals are doing, those type of things, so that when a deal comes up, I can spot a deal. Because what you're looking for on this whole thing is you're looking for deals. You're looking for situations where you can come in and add value, where a house is worth $250 and you can buy it for $210. Maybe people who are flipping are looking for a $250 house that has drastic issues and they can turn it, and they're looking at it for $150, right? But I'm not looking for that. That's not my thing. My thing is, paint, carpet, those type of things. Let's run through it in a month and put it out for rent and have it be a great rental, good location, and it'll stay full. Offer the rent at a good price so you get lots of applicants, get the one you want. Some of our renters are there for 5, 6, 7, 8 years. in the rentals. The tough thing about that is you really have to spend a lot of time thinking about when you should increase rent, how you should increase your rent, the renter's perspective on it, and in a situation where market value and rents went from 1,000 to, let's say, 1,600, people would think you go from 1,000 to 1,600, and they might do that, but I don't. I might go from 1,000 to 1,075. Definitely less than 10%, $50 to $100 up, and just try to catch up over time. I don't need market rents. I didn't buy because of the market rents. The market rents and added, safety measure in there for me. So I just want to take some time today and catch you up on what's been happening, what I've been doing, what's been the results, and also on the things that you could be looking at and the way you could be looking at those things to make some money and get into this, get into the game of finding deals and being able to close those deals. So hope you have a great day, and I'll talk to you guys later. Bye.